Thanks so much. Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour. The latest milestone for the Dow. On track to close above 48,000 for the first time ever. So does it signal the official start of the everything rally into year end? We will discuss. We will debate. We'll do it with the investment committee. Joe Terranova, Liz Thomas, Gary Firestone, Steve Weiss joining me for the hour as we check the markets. We do have the Dow above that level, 48,200. So we shall see over the next 3 hours or 4 hours what exactly takes place. S&P is a bit of a negative, as is the NASDAQ. Joe, is that what this is here? If you look at the sectors this week, healthcare is up 4.5%, materials are up 3%, financials are up 2.5%, comm services and tech doing just fine, but they're not the best 2 or 3.
They are not. So today we have 30 new S&P 500 52-week highs. Of those 30 highs, 27 of them are non-technology. Goldman Sachs, Morgan Stanley, JP Morgan, Gilead. These are the names. American Express, Amgen. You do have your CrowdStrike, your IBM, and your Seagate. So the battleship of momentum, as I've identified a couple of weeks ago, continues to turn. It began the turn with what were the real VIP macro assets when you think about momentum, and that's the dollar, which has been lower on 2025. In September is making the turn higher. It is crypto, which in early October found its peak. Thereafter, it was gold that found its peak. So that momentum factor continues to turn more towards quality, and it's represented in the type of performance that you are describing.
Liz, is this the beginning of the chase into year end?
I do think it's part of the chase that's ongoing. The chase began with people chasing mega cap tech continuously.
Yeah, I mean, like people who missed out a little bit on that. Like PM's underperforming because it can only get so big in those areas. Now it's the make up or break up with these markets.
That's right. It's the beginning of the chase of everything that might now try to catch up with mega cap tech. So what's happening and what we're seeing, and this is a lot of why I have been pounding the table about healthcare. It was so unloved for most of the year that now investors are looking for other opportunities for growth because they can't convince themselves to put a lot of new money to work in tech. So you look at things like pharma and biotech, and here we are. The chase and that catch-up trade is happening. I would expect the catch-up trade to also benefit small caps, the equal-weighted S&P. Now, I don't think they close the gap entirely because the gap is wide, but I think there probably will be some narrowing of the gap. The one risk that I want to point out is that we're headed for probably a government reopen today, so we're likely to start to get the data that we missed. Now, we may not get any October data whatsoever out of some of those big releases, but we'll start to get some of the delayed data. If the market has to digest that, and if some of the private labor data has been any indication of what's to come, there might be some bumps in the road and some different things that we have to expect out of the Fed come December.
Yeah, I just think that we would put the Fed back in the, we start creeping up closer, Weiss, to 100% for December if the labor data gets any squirrelier. But healthcare highest close since October of 24. Financials hitting new highs today. Everything rally? Is that what we're on the cusp of here?
I think we're really on a pause now. What's interesting is
pause?
A pause in the rally in terms of the upside. That's my view. I think volatility is still going to be the watchword going forward until we get through the Fed. So right now we've got two events, major events. We've got NVIDIA next week, a week from today, and then we've got the Fed decision due on December 10th. So typically, the game's known that the pull forward of the January effect we've seen year after year getting earlier and earlier. We're not seeing that this year. I think we will see it. But once we get through that, again, those 2 dates. Look,
what do you mean we're not seeing it this year? I mean, in 1 month, the Nasdaq's up 5%, S&P's up 4.3%, the Russell 2000 is up 2.5%, and the Dow is up 6% in a month.
True, but it's a continuation of what we've seen throughout the year. The year's been a pretty good year. We don't see every 5% month, but we came off, don't forget, a few rotten weeks, very rotten, and particularly in technology. So look, healthcare, there's a rotation into it. I get it, but I think that depending where you are in healthcare, it's a landmine. So I don't know who others.
Well, that's because you're walking in the field of UNH, which has been a landmine. That's the bulk of your exposure. Maybe it's the only exposure you have People are
It
making
is the only exposure
people are
I've
making
had.
money 6 ways to Sunday.
I made a
in
lot
that
of money
space.
in UNH. I sold it. I didn't sell at the top anywhere near it, but I bought it pretty damn close to the bottom, and it's done amazingly well since then. But what's happening in healthcare is the government's going to cut back on their spending. We know that, right? And we know that insurance companies now are looking to increase their margins. And what do they do in that? Right? They cut back on benefits, everything else.
Yeah, but you're focused on the largest of the healthcare. I mean, the biotechs have been ripping. Lower rates are a boon for that, Carrie. You know this story well. We don't have to have a whole healthcare conversation, but the point is that this is what the bulls would have wanted. If you're going to have a little bit of a sleep for a couple of days in tech, could something else pick up the slack? The Dow over the last couple of days, and if we close over 48,000 today, would suggest you're darn right we can.
Well, healthcare is a place to put money for sure because it's underperformed for years now, multiple years in a row. If you put up just a chart of Amgen, because it's one of the names that you guys mentioned as hitting a new high, right? Okay. So this is a stock that is so underperformed, and it's had this big rally. But, you know, look at the chart for the year. I mean, it's nothing like the way the S&P looked. So to make a new high, to make a 12-month high, doesn't take a whole lot. And there are many healthcare stocks just like it who have suffered all year, had a good quarter, is showing growth. And if we listen to what's gone on in the last couple of weeks, talking about who can make a deal, Novo made a deal, Lilly made a deal. That deal brings the price down, but the margin on these drugs is so high that they still come out winners. And winning in this environment is what the market's about. The tech and the ComServe companies have been the winners, the sole winners. Now you can add other companies such as these. Maybe financials will be winners too because they figure out how to work the system.
They're up 1%. Financials are today. Healthcare's up 1.25% as a group. Do we collectively think that we're set up for a nice run into the end of the year, and that this would be? I'm trying to think, like, what would be a better sign for the market than what's happening over the last couple of days?
This is the chase for performance. This is exactly what it looks like. This is what we've been speaking towards. Last week, we talked about not going short the market because we thought the government shutdown was going to end early this week, and thereafter you'd get a rally and you get the recognition that opportunity exists in other areas of the market. That's exactly what has unfolded. So why should it discontinue? It will continue into the end of the year. Once the calendar flips, you turn the page, it's a clean slate, you take it from there.
Yeah, and just to be clear, I'm looking for the rally. It's the timing of the rally, number one. Number two, I'm not anti-all healthcare. There are certain areas of healthcare where I'm definitively negative on.
I mean, but this market is answering a question that was going to be asked of it. If tech doesn't go up every single day, can the market go up without it? Can the market have a rally into year end if tech, let's say, doesn't outperform between now and the end of the year?
If NVIDIA doesn't have a good quarter, then the market wouldn't be able to really move. But we know that they're going to have a good quarter.
I know.
They've signaled
that, right?
So they've told us.
It's been telegraphed by the spending of others.
Yeah,
Normally you have to wait to hear from the company itself. Now all you got to do is listen to everybody else.
Right. Yeah.
Right.
So that helps.
AMD today, you listen to them, their enormous growth that they're projecting comes at what? Comes at the expense. It's no accident that Meta traded down this morning based upon AMD, because one person's good news is another's bad, allegedly. But I think these are great opportunities to buy those hyperscalers.
I think lastly, what we're benefiting from here, in particular for a portfolio manager, is that quality, quote unquote, that's always where you want to be, right? Well, quality didn't work going into the third quarter for 2025, was dramatically underperforming. Well, that works to your favor now. If you're going to see this rotation away from technology, you have somewhere to go. And from a valuation perspective, except for energy, it looks really attractive.
Well, you said AMD. I mean, we made it our chart of the day.
Yep.
For obvious reasons, if you take a look at the stock coming off of the first investor day that they've had in some 3 years. Lisa Su, the CEO, says the AI data center market will be worth $1 trillion by 2030. Stocks up near 9%. I thought Melius had an interesting note today. I'll quote from it. Interestingly, AMD was the first to issue what seemed at the time to be a cartoonish 2027 TAM for AI semis networking. We know now that it was too low, as AMD seems to be conservative even now in forecasting a $1 trillion plus TAM for, as I said, 2030. Joe, you own the stock.
We do, and this is interesting, and this is going to sound somewhat controversial, but from a momentum perspective, this is a new addition. And AMD kind of sat out on the sidelines. ChatGPT entered the conversation in 2023. NVIDIA, along with its other AI friends, began to rally.
AMD was, you're right, left out. It was
AMD
all
was
about
completely
NVIDIA.
left out.
Didn't have the technology.
Hold on, let me statistically give you this. This is remarkable. From March of 24 to April of 25, AMD fell 67%. So now we're getting the realization that, yes, AMD is going to participate, and you actually have a building of positions once again. You look at the valuation and say, wait, you're probably crazy to say that, right? But no, this is actually a new entry into the momentum category, and therefore, I think it has room to go further.
You had already owned NVIDIA in your charitable trust, right?
Yeah.
And now you've added it in your broader portfolio.
Exactly.
Why was now the time to do that? We had a conversation yesterday, which was if you don't own these names now, don't buy them here. But you did. Why?
Okay. Well, I wasn't in the conversation yesterday.
Which is exactly why I'm telling you. I'm telling you what the outcome. That was the outcome of the conversation.
Thank you.
All right. So why do you say to heck with that?
Well, the stock was down, right? NVIDIA was down from recent peak to trough 17%. And we've been waiting to buy it. At the time when we bought Broadcom, it was trading at 25 times next year's earnings. And then NVIDIA was at 31 times, and we saw more potential to the Broadcom story, moving into a broader range of chips at high-level abilities. But now you've got NVIDIA, which is selling at 36 times, and 31 times, and Broadcom selling at 36 times. It's moved 160%. Broadcom, and NVIDIA has gone up 60%. Decent move, of course, but it's more attractive. And we wanted exposure to it. We didn't have any, and for the Aureus accounts broadly. And so we thought this is the time to make that investment when the stock has given us the opportunity to buy it at a more attractive price.
Right, so I'm going to come back to you in 2 seconds because there's a related move that I want to get to. But there's a lot of Fed speak today, including from Raphael Bostic. And we've actually gotten them earlier than we anticipated. Steve Leisman, correct?
Yeah, Raphael Bostic, the Atlanta Fed president, who announced this morning he's retiring in February, but making a speech on monetary policy, says he favors keeping rates steady until inflation is convincingly moving towards the 2% target. He says the clear and urgent risk is still price stability, admits it's a close call, but he's weighed all of the evidence out there, noting that inflation has exceeded the Fed's target for what will be nearly 5 years and doesn't really see it moving until sometime next year. And his concern is that the public will doubt the Fed's commitment to the 2% target. Bostic's not a voter this year, not a voter next year. He'll be leaving. But I think what he's doing here is really laying out the position of those hawks on the committee, pointing out that core service inflation remains above the pre-pandemic level, and is the main contributor to inflation right now. In other words, he's really dismissing this argument that it's all tariffs and we shouldn't worry about it. He says there's little to suggest that price pressure will ease before mid or even late 2026 at the earliest. The Fed cannot assume that inflationary pressures will quickly dissipate, as some on the committee have suggested. And then on the job market, a little more on inflation here. He says the evidence from the surveys that he's reading suggests continued upward pressure on prices. So he's looking at several surveys of businesses saying they're going to continue raising rates. Rate cuts, he's concerned, could heighten the risk to inflation and would fuel it, also vice versa. And the indicators show a shifting rather than a weakening of the labor market. Talks about reduced immigration, aging population, technology, and low population growth. Scott, I'll leave it there. Something to consider as part of your conversation there, but there's one very committed Fed official who does not support cutting interest rates at the December meeting.
But let me ask you just quickly before I let you go, because you said he's a non-voter. So how much weight does a non-voter's view have in the room? How relevant is it?
Well, look, if it's a really close call, then Powell would focus on corralling the votes towards the place where he thinks it ought to go. But, Bostic is not an ideologue in terms of, him being a dove or a hawk or a committed dove or hawk. and everybody gets to talk and everybody shares opinions. And I think what we should do is take this as a meaningful contribution to the understanding of why Powell pushed back so heavily at the last meeting, and be a pretty good insight and window, and very methodical with charts and graphs if you want to check out the speech, a very methodical laying out of the position of those who think the Fed should hold rates in December.
All right, good stuff, Steve. Thanks as always. Steve Leisman, the latest comments from the Atlanta Fed President Raphael Bostic. Market not doing a whole heck of a lot, but it sure sounds like if he was a voter in December, it would be a no in terms of a cut. Back to the conversation at hand. Again, so buying NVIDIA in your Arias portfolio and trimming Broadcom.
Yeah.
That's it. Why?
It's, I would say, portfolio management. What we're supposed to do is buy low, sell high, and we bought Avago, Broadcom, in June of 2024. The stock is up 160% since we bought it. So it's long term. It's become a big position. We've added to it some along the way, but we have big gains. We didn't own NVIDIA. We are holding our chip position. We're increasing it overall, but it makes sense to have both. We think that there's more opportunities in NVIDIA with GPUs than Broadcom. It's got a broader base. Broadcom mostly serves the hyperscaler, and NVIDIA serves everyone.
Okay, Joe, so I know you own Broadcom. Cowen is out with an earnings preview for both. Broadcom's target is $405, so a nice upside from here. They maintain a buy ahead of earnings, which are on December the 11th. We're a week out from NVIDIA. Maintain buy over there at $235.
Okay, so I would imagine that price target is 12 months out, and I would say 12 months from now, I could reasonably see Broadcom being at that level. I think 12 months out, Carrie's going to be totally fine in her NVIDIA buy. All I could see is what's in front of me right now as it relates specifically to Broadcom, NVIDIA, Microsoft, Meta, and Tesla. And in each one of these stocks, I'm looking at momentum. That's my strategy. And over the last month, you have seen a breakdown in their momentum score. Their momentum score is lower than it is for a name like Apple or Alphabet or Amazon. And that's why, for me, as I said to you yesterday, I would just sit and observe right now. If you're long, fine. Stay long. You're going to be fine in 12 months. If you want to buy these names, I would just wait a little bit further, let the market prove itself, and I'd rather see the reversal. I'd rather buy NVIDIA at a new all-time high above whatever it is, 208, 209, than actually buy it here as I see momentum weakening and price concurrently falling with it.
You're a buy high and sell higher investor.
Absolutely. That's the strategy that I
wrote
and process I live by.
Wrote the book on it. Hyperscaler debt. It remains a big story. What can I tell you? I mean, there are more people who are putting out notes about it today. Let's talk about Netflix. It's our call of the day today. The stock has not traded well since earnings. The chart you're looking at there reflects that accurately. It's down 8% since reporting on October 21st. The stock's down 6.5% in a month, down 7% in 3 months. MoffettNathanson today says enough. Looks just right for the next leg of growth. They talked about the bearish narratives that have emerged, among them engagement growth slowing, more exposure to third-party pressures, and a couple other things. Are they right, Joe? Does this pullback look, quote, just right for the next leg of growth?
So as I'm speaking, if we could show an actual 6-month chart, what you'll see is the stock has done nothing.
It's up 3%.
Since June 30th, that was your actual peak. So it's been a very challenging environment for the last 5 months. I think most of us know the fundamental catalyst behind why you want to own Netflix, why Steve and I have been longtime owners of it.
But for those who don't, share that.
I think it's going through a period. I think it's going through a period right now, more than anything else, where it's consolidating the gains and it's marking time and it's looking ultimately for what that next catalyst could be. So the catalysts have ranged from balance sheet improvement, free cash flow generation, the content creation, moving more towards live sports, the return of programming that people have been excited about in the past, and then obviously the ad tier pricing from years prior. those have been all the catalysts. Now the question becomes, okay, while you sit and wait, what the next catalyst is ultimately going to be. And candidly, I'm not sure. I'm willing to wait, and I will wait. It's the stock is moving sideways. It hasn't broken down. It challenged the 200-day moving average. It failed to break down below there. So I think it's a classic consolidation.
Right. What I'm surprised you didn't mention, given your technical underpinnings,
is that 200-day moving average.
It retook the 200-day.
That's right.
So that's now support again. But here's what I'd say. The company, since it's come public, has gone through these periods of consolidation. What's hitting it now is the thought that Paramount's going to acquire Warner. They'll be a much more formidable competitor. But what I'd say is that that Netflix, in addition to the levers you mentioned, always has a lever of price. I still think they're grossly underpriced relative to what the market will bear, and that they could raise at any point in time. But in the interim, look, this is just normal trading on a long-term basis for Netflix. It's a permanent compounder, and I would own it. They also got the succession planning out of the way now with the co-presidents or co-CEOs. So I continue to like it.
Okay. All right. Take a look at On Holdings. These shares are surging today near 20%, which I said, get me Jim Lebenthal, and the team obliged. He's been on hold, waiting for this segment to come about, and he joins us now, all giddy off his tractor. He put his sneakers back on. Jimmy, what do you make of this? Because the stock was down a bunch prior to earnings year to date.
Well, my favorite shoes are really my On hiking boots. I mean, they're beautiful. Too beautiful to wear on the tractor. But look, here's the thing. The stock should be up. The growth rate of this company is just stellar. 34% top-line growth this year over last, looking at mid-20s next year. And next year, the earnings per share look like they're going to literally double. So at 27 times next year's earnings, I think it's priced to go higher. Let me point out, though, that when you get a stock that's up 20% on a day like today, and you see that the first 30 minutes you had 3 times the average daily trading volume, there's clearly some short covering going on. So the stock should go higher, but just bear in mind that today is at least some short covering going on.
Okay,
Still and all, yep, go ahead, Scott.
Well, hang on. Take a breath. We're looking at a 2-day. Let's do a year-to-date now, guys, if we could. Why was the stock, I mean, if you're so bullish on it and the market's reacting the way it is now to it, why was the stock down 36% on the year coming into this print? Like, you can see it from, let's call it May, late spring into the summer. What's with that slide that we're looking at on the screen?
2 things. One, it simply got too expensive. And you may recall I was in this previously, but I sold it back in February. The forward multiple was 60. That was simply too expensive. You combine that with concerns which have brewed over the last few months about the health of the consumer, particularly with the shutdown. And there were concerns that maybe people are not going to be opening up boxes of On running shoes on the holidays. Well, the commentary from the CEO and the rest of management is clearly that there is a lot of momentum to their sales. And what I take away from that is that this holiday season is likely to be another case of the haves and the have-nots. I don't think this is a time to go out and buy all of retail. But if you're selecting which retail stocks to buy, this is clearly one of them. This is clearly one of them with what management is saying about the demand they're seeing.
Hey, Jimmy, be a little bit more specific when you say haves and have-nots, because my understanding of this company is they're selling really expensive products. And to me, that means they are not selling to the have-nots. They're selling to the haves.
Well, yeah, thanks, Joe. When I said the haves and the have-nots, I really meant the companies as opposed to the consumers. And yes, you are correct that a typical On pair of running shoes costs about $150. Now, in the grand scheme of things, that apparently is where consumers are willing to splurge, according to what the management comments are today. They're seeing tremendous demand in this fourth quarter. So $150 may be expensive for a pair of running shoes, but they're not expensive in the overall consuming power of the general consumer.
Right.
And frankly, these are really good running shoes. I mean, I don't know if you guys are runners. These are really good running shoes. The hiking boots are awesome.
We didn't realize you were either.
Yeah. That chart is uglier than a pair of
Lieutenant
hose.
Lebenthal, we got to go. We didn't get a chance to salute you for Veterans Day because you weren't with us yesterday, but I don't want to get out of here without doing that. So thank you for everything you've done for this country, Jimmy.
You're always marvelous, Judge, and I just have to say it was a privilege and an honor. Thank you.
All right. Of course, it's our naval officer, Jim. All right, up next, 3 o'clock Eastern, we're going to see if we close on the Dow above 48,000 for the very first time. Brian Belsky, Cameron Dawson, Low Tony, among the gang joining me in just a couple hours, and I hope you will be there as well. Final trades, Stephen Weiss.
Taiwan Semi should be higher today based upon.
You can't will it higher, Weiss.
AMD. I'm trying my best.
It is higher.
Well, come on. That's not higher. I'm talking up 20%.
20%.
I'm only kidding. But it will trade higher into the NVIDIA call. And if it's
going
a great
lower
story,
as you're talking.
Yeah, well, good.
It was.
You make a good point, but
Carrie.
Health Equity, HQI, it's the largest health savings plan company.
All right, Liz Thomas.
Biotech, I think it's a good corner of healthcare. I know it's seen a good run, but I think there's more to come, especially next year.
You made a good call here. Better to be early than never. Joe?
That's true.
I personally long CBOE, staying with the trade, buy high, sell higher, new all-time high, keeps going up.
Oh, new all-time high. Okay. We'll see if it goes up while we're talking about it. All right, I will see you on the closing bell at 3 o'clock. We'll track the final trade, see if we get that 48K on the Dow. And welcome to Closing Bell. I'm Scott Wapner, live from Post 9 here at the New York Stock Exchange. This make or break hour begins with the Dow heading for history. The first ever close above 48,000 within reach. Here's how we look with 60 to go in regulation today. Barring a pretty dramatic turnaround, we're going to hit that mark today. Certainly looks like that. As you see, the majors were well above 48,000 thanks to healthcare, financials. They're among the best sectors today. A new high for Goldman Sachs. The whole group's doing well. We'll show you that one because it is a record high at 3%. Tech, as you heard already, it's taken a bit of a breather today, though not shares of AMD. They are surging following the company's first investor day in some 3 years. Elsewhere, footwear and apparel company On Holdings is ripping following its earnings report. Take a look at that, up 19%. We'll track it right into the close. It is one of the day's best performers. All of that takes us to our talk of the tape. New Edge Wealth's Cameron Dawson and Truitt's Keith Lerner. They are here at Post 9. So history's going to be set today.
Yeah.
You agree with what Brian said?
Yeah, I think we're still in this environment where you have two major things dragging markets higher. You have earnings estimates that continue to be revised higher, continue to make new 12-month forward highs, and you have positioning that remains just neutral. So because earnings are moving higher, that supports risk appetite, that supports people needing to be pulled into this market, and because positioning is neutral, there's still cash on the sidelines that needs to get invested, and thus we think that you could continue to see this chase as well as dips being bought rather quickly.
That's what this chase starts to look like, what we're witnessing now. What should we think about the level of spending, but now the debt part of the picture starts to come into focus, and we're talking about it a lot more. We've seen it in the past. Debt is in part a great fuel to a bull market, but it can also eventually be the great destroyer.
When you are growing earnings 30, 40, 50% on an annual basis, you can get away with a lot of spending kind of no matter how you fund it. But the challenge is that the mega caps are going to see much slower earnings growth next year. Meta will go from growing earnings 47% this year to shrinking earnings by 2% next year. So now all of a sudden, all of the benefit of the doubt that you had kind of evaporates because you don't have the earnings growth that gives you the margin of error. So we think that it will be really interesting how the market continues to digest this slower earnings growth, and if weaker stock prices actually causes the companies to rethink their capex plans, because we certainly saw that in a year like 2022 into 2023, those years of efficiency. So we think we're probably entering a very different phase of this AI capex cycle only because the earnings growth is slowing.
Booming, do you think, with NVIDIA's earnings report, or do we already feel like we have a good idea of what's going to happen just by virtue of the spending numbers that we've seen from all the hyperscalers? It's kind of a tell on what we're going to get, right?
I think it's less important what NVIDIA actually reports because it's likely to be a beat and raise, and it's more important how the market reacts. Because if you get a beat and raise that looks fantastic on the surface and the stock trades down, that certainly tells you that the buy side expectations are higher and positioning is likely very crowded. So it's more about the reaction and less about the numbers.
Like the juxtaposition, if you will, of a big splashy headline that says Dow 48,000, first time ever. And I mean, it's like the index that, you know, Mr. and Mrs. America look at, right, to find out what stocks are doing besides their 401k statement, obviously. But then you hear from all of these, restaurant stocks, the guidance is cut, the comps are down. I could go through 25 to 30 names. What do I make of that?
Well, because the top part of the K-shaped economy benefits from the stock market, but the top part of the K-shaped economy is the one that owns the majority of the stocks. And so you still have large swaths of this economy or consumers that aren't participating in the stock market, do not benefit from the wealth effect. So, at the end of the day, the aggregate data is still showing that there's signs of slowing and signs of doubt when we look at NFIB. If you look at University of Michigan, you look at consumer confidence. But because you have that top end of the consumer still pulling everything up, it doesn't show up in the retail sales.
People think that Charlie's going to make the field goal, that this is going to last and healthcare is going to win for a while.
Well, Charlie has to deliver earnings, right? If you don't have the earnings growth to back it up, you will see these rotations all be flashes in the pan, which is why the small cap rotations haven't stuck, why value rotations haven't stuck. You have to see these earnings trends start to turn and catch up with what we're seeing within growth and tech.
All right, we'll leave it there. Keith Cameron, thank you so much. We'll see you soon. The Closing Bell Market Zone, CNBC senior markets commentator Mike Santoli is here to break down these crucial moments of the trading day. Plus, Contessa Brewer is watching Flutter earnings. They are out in OT, and Christina Partsinevelos is covering Cisco's results. And New York Times Pulitzer Prize-winning columnist Jim Stewart is with us ahead of Disney's numbers, which are coming out tomorrow. It's good to have everybody. Mike, I start with you. Dow 48K.
Yes.
We're going to get a close above that for the first time ever.
And it's reflective of this market tone that's taken shape the last couple of days, which is from tech and Mag 7 into older economy, especially financials and healthcare. The Dow has a massive overweight in both financials and healthcare, not by design, but because of where the prices sit, and that has been to its benefit. The S&P staying green the hard way, in a sense. Mag 7 is down 1% as a group. The meme stocks are down 1.5%. You got crypto heavy. So all the risk appetite tells are on the downside, and yet it's sort of the laggards and older economy stuff. It's an elegant rotation.
Financials
are the one area that are cyclically geared, and they have been leadership, and they have been outperforming, and they're working, especially the brokers today. I think that $110 million M&A fee from Goldman has gotten people's attention on that front. Nonetheless, I do think it's a tough way for the market to really make a lot of upside headway, but it definitely is healthy rebalancing in the interim.
Hello, everybody. Welcome to Blue Cloud Trading. I'm George. It is Wednesday, November 12th. The market is closed, and in this segment of the video, we are going to go over the indices here. We're going to take a look at the heat map. Okay, we're going to look at that. We're going to take a look at the sectors, and then we'll also take a look at the stocks that they talked about on today's episode of the Halftime Report, and a few stocks from the closing bell, all right? And we'll look at the SPY, the NASDAQ, the Dow. We'll look at about, 13 stocks, basically, and we'll look at some of the Mag 7 stocks like Apple, Tesla, Meta, Microsoft, as well as some of the strongest sectors. So let's get into it. We're going to first start off using FinViz Elite to find the how the markets did, right? So basically here we have the Dow. It was the only index that was up the most, 0.68%. It gapped up basically in the morning, continued up, and then just went sideways the rest of the day. NASDAQ actually gapped up in the morning here, as you can see at that level, and then dropped around 12 p.m. It recovered a little bit, but it was still down 0.28%. The S&P 500 also gapped up in the morning, but then dropped and then closed up just 0.06%. Russell 2000 also gapped up in the morning and then dropped and then stayed under the closing price from yesterday. So it was down 0.25%. Let's take a look at the heat map. All right, so here we can clearly see what stocks did well, right? And which ones didn't. The financial stocks did really well today. Healthcare stocks did really well, okay? Energy stocks, not so much. You can see a little bit more red there. Google and Meta were down, so was Amazon and Tesla. Oracle was down, Palantir. But Microsoft, Nvidia were up, so was Broadcom. A lot of the semiconductors did well today. So did the software application, a lot of software applications that you see there. Let's take a look at the Dow Jones, because that was the strongest of the bunch. And you can see that Amazon, Apple, CVX, and Home Depot were really the ones down the most during the day. All right. So we also want to take a look at the groups. So let's take a look at that real quick as well. As you can see, basic materials was actually up 1.5% today, and then healthcare financials followed that. And then communication services and energy and consumer cyclical were down the most right there. Here's the 1 week performance. So far, basic materials this week is up 5.07%. So as you'll see in a few moments when we look at silver and gold, yeah, there's certainly something that's happening here with the metals. And it's not just those specific sectors within the materials. There's a couple of other ones. I've added a couple of stocks today from the basic materials sector. And you can find out about that by becoming a member, and just real easy to do that. Folks, if you want to become a member, you basically go to my homepage here, click on join. Okay. If you haven't subscribed, do that. It's free to do that. If you want to support the channel, hit the join button, select Blue Cloud Trader or Blue Cloud Legend level or Blue Cloud Supporter if you want to support the channel. Under the Blue Cloud Legend level membership, you'll get the daily updates on my trades. Okay. As well as those exclusive member only videos. Under Blue Cloud Trader, you'll only get the exclusive member only videos. All right. That I do once a week. Here's a list of them. And you can see the latest one where it's like a 1 hour, 16-minute video. You can see the majority of them over like an hour there. Okay. Let's get into the stocks now. So we're going to start off with the SPY. We always have to start off with the S&P 500. And it's the benchmark, right, that we're all trying to beat. And so as you can see, it was only up 0.06%. And this is the daily chart. You know, we got a reversal candle here today. So nothing really major happening here. Just kind of moving slightly up. The Qs were down 0.08%, but they're basically holding up above the Tenkan-sen. The green line right there is the midpoint of the last 9 periods. Okay, so it's the average of the 9 last periods, and in this case 9 days. And so as long as we stay above that, that's really important, I think. We're using the Ichimoku indicator. We also want to be above the Ichimoku cloud. We want the Chiku span above price. This is the closing price today, projected 26 periods into the past. All right. And there's the Senkou span A and Senkou span B. Let's take a look at the Dow Jones. You can get a better review of the indicator in yesterday's video. I went over it a little bit more in depth. Dow Jones up once again, right? The most, 0.7% out of the U.S. indices, and it actually broke above that high. That was something I was talking about. We need to get above that level, and we did. It happened on higher volume. ADX is moving up. I think we're going to see a continuation here. I mean, it could be a short little pullback right down to the Tenkan-sen to catch up, but it could also just continue moving up, or maybe even go sideways here tomorrow. We'll see what happens. FEZ is the Euro stocks. This is a good one. Now, this one popped today. It was up 0.96. It was actually up the most out of the indices that we've got listed here. This is the Euro Stocks 50 ETF. So Europe is looking pretty good here. You can see the volume also increased, right? These last 3 days, it's been going up, and we broke through that 63.70 level based on that prior reversal candle. So now that we're hitting higher highs, I think we can expect it to continue moving up. The next level of resistance will probably be 66.26, and that's about 3% away from where we currently are. And here's the monthly, because that's a purple line right there. It's based on the all-time highs. That goes back to, let's see, when was that? That was back in 2007, folks. So this particular ETF has been around for a long time. You can see it's been around since 2002 or so. And we're coming back to those prior highs. So we'll see what happens there. Russell 2000, here it is on the monthly chart. Now here's a weekly chart. It's still under the Tenkan-sen on the weekly. On the daily chart, you can see down 0.25%. This is looking the weakest out of the bunch because we've got a negative crossover that took place. The Tenkan-sen is still under the Kijun-sen. The Chiku span, the white line, is still under the candle 26 periods ago. And so, yeah, it just doesn't look as strong as the other ones. I wouldn't be jumping into the Russell right here. The VIX moved up slightly, up 1.33%. I don't think it's anything that we should be overly concerned about. It touched the top of the cloud and then reversed. So that's good. You can see that on a 5-minute chart. Okay, as well. Let's see. Let's keep going. And we're going to now take a look at the stocks and some ETFs maybe in here. So I've got them highlighted here with a blue flag. These are the strongest ones, some of the stocks that they talked about. AMD on the daily chart looks very bullish, up 9% today. Okay, here it is in the weekly chart, also looking good. I like it. I expect AMD to continue moving up. Amgen, now this one has had a nice big move, but today it was down 0.64%, and it also created a reversal candle. This is a warning sign. In my opinion, if price gets under that 335.88 level, okay, expect this thing to potentially pull back. And if it does, we are talking about a potential drop about maybe 6.5% just to reach the next level of support, which is where the two moving averages are, okay? CBOE is looking pretty good, but we got a doji candle. That's a reversal candle as well. Overall, I like this one too. It's in the financial services sector. It's still moving up, but it's getting far away again from the moving averages. So many times it will want to come back. Remember, these moving averages are like a magnet, and it will want to pull back to its original spot. If you look at the weekly volume bars here, as price has been moving up week after week, there's less and less participation. There's not as much buying taking place here, and that's why the volume is starting to dry out. But on the plus side, CBOE did in fact break above this level here. Will it stay above it by Friday? I think it will. Okay, let's keep going. Cisco, I like this one too. This one actually happens to be one of the stocks that I added on October 31st. So let me show you the daily chart I had added back here on October 31st. I'm only bringing this up because they did come out today with their earnings announcement after the bell. And let's go ahead and press that button so we can see how we did here after hours on this particular trade. It was already looking pretty good during the day, so this was a lot of optimism before the earnings. But let's see what it looks like now after the fact. So it's right at the close. It was 73.96. Let's include post-market data. Boom, 79.66, up 11.09%. If I switch it to a 5-minute, we can see this little highlighted box right here is basically the after hours trading that's taking place. Okay, so you can see there's 4 p.m. So it was around this time here. Let's see what time was that, around 4:10 or so when they announced it and it took off. So that's beautiful. I like that. I'm still holding on to that one. All right, let's keep going. Eli Lilly, let's look at this one. So this one closed at 1,017.78. This one looks pretty good still too on the daily. It's a little far away from the moving averages, so I always get a little bit concerned, but we don't have any reversal candles here yet. So this is still good. The volume was higher today than it was the prior day on the weekly chart. It also broke through this 972 level. Okay, that goes back to like 2024. So Eli Lilly looks really strong, and it's in a sector that I like a lot, healthcare. MS, Morgan Stanley. Today, this week, we've got the candle above the 167.13. The only thing I would caution, though, is that this candle is still forming because it is a weekly candle. We won't know what that looks like until Friday. We still have 2 more days, okay? If the next few days it starts dropping and gets under 167.13, obviously it's not going to be as bullish, right? So we got to watch that. Here it is in the daily chart, though. I do like the daily. It popped today, and so it's looking good. I like Morgan Stanley. I mean, it broke through this little consolidation area here, and that's that first candle where it's breaking, and it happened at higher volume. And we also have a lot of positive things happening with the directional movement index, right? You can see that the ADX is moving up. That means that the momentum is increasing. The positive DI 9 is moving up. That's positive. Negative DI is moving down. That's also positive, right? So this is all good. Next, we've got XBI, which is biotech. I like this one too. Yesterday, we talked about how it broke the 113.21. It's staying above that level. I don't like this type of candle, but it is holding up. It didn't come back under. So this is bullish still, as far as I'm concerned. Here's the weekly chart. Again, this is another one that, it's got to like stay above that 113.21 by Friday afternoon. So we'll see if that happens. I think it will. It looks good overall. Okay. The rest of these, there's something off. Okay, there's something off technically in relation to the Ichimoku indicator. And so we might want to hold off on, adding positions in something like one of these stocks at this particular time. I like to add positions into strength when the stock is starting to emerge out of a decline, typically, not when it's still in the process of declining. All right, it's not usually a good idea to add positions when price is dropping, because we don't know exactly when that's going to end, and it can be long lasting, right? Now we have with Broadcom on the let's start off the weekly chart. On the weekly chart, this is the last week we closed under the 9 period here, so that's a bad sign right there. Today we were up 0.93%, but this candle is still forming. Let's look at the daily chart. You can see that it's been kind of stalling in this range here. Okay, I mean, I could take a look and see what it looks like after hours real quick. Let's see what it looks like post market. It's down even more. Okay, you can see that. So this is what I'm talking about. Like, you know, it's really important to pay attention to the candles. They tell us a story. They tell us what's happening in real time. HQY, which is Health Equity Inc. It's in the technology sector, health information services. Looks good on the daily chart. Okay, with the cloud turning bullish here. Price got above the 200, but we got a couple of reversal candles here on the daily, and on the weekly chart, we're still under this 26 period. So the 26 period is based on the midpoint of the last 26 weeks. And so that's still bearish as far as I'm concerned. All right. I mean, it's just a weak trend, really. That's all that is, really. It's a weak trend. NVO, I mean, obviously, now here's a perfect example of why you should not be adding positions when price is declining, okay? Because you could have made that assessment right here where price got cheaper than where it was right there at that 150 level, or okay? Maybe you'd say, oh, okay, the price dropped down to $100. I think I'm going to buy here. All right, maybe you see a positive candle and you buy. Well, because you're under the moving averages, all right, you've got the momentum against you. And if you look down below, this directional movement index also helps, right? When the red line is above the green line, it's not usually a good idea to be adding positions. As you can see, it declined so much from this point right here. We got under the moving averages, for example. It actually has dropped approximately, let's see, 60% in about 1 year. Okay, so your money gets tied up, and then you're like, you know, you're just waiting and waiting and waiting. And I understand. I mean, on the weekly chart, especially, you really need to start to cut losses quickly on the weekly chart. The daily chart, you can allow that to run a little bit longer, but the weekly chart, you really have to be cautious with because we're not talking about days anymore. We're talking about weeks, okay? And when you have a series, for example, of, you know, look at this here, for example, this lower high here. It's just a lower high there, lower highs, right? And lower lows. That's the definition of a downtrend. And you also have a downward channel. You can see that very clearly right there, that yellow line that I just drew. So just wait it out. Wait to see what happens here. Now, this could turn bullish. We've got a potential double bottom. But that's just a potential double bottom. It could just as easily tomorrow or the next day drop right under that level. So that's why you want to stay out of something like that. And it's in the biotech industry. So you would think, oh, this is a great sector. Okay, maybe, and it was up 2.26%, but I'd stay out of that. Anyway, ONON on holdings was up 17.99%. Here it is in the weekly chart. Excuse me. Yeah, it was a big day today for it, but it's still under the cloud on the weekly, and here it is in the daily chart. So what happened with the earnings that came out? It popped, right? It popped, but you know what happened? Instead of people getting excited and wanting to hold the position, all right, and having that kind of faith that it's going to continue, the opposite happened. People took their profits, right? They got frustrated holding this position for so long, and guess what? The second that it popped, they're like, okay, I'm out of this thing. It's in an established decline. There's the 200-day moving average is still declining on the daily chart, and it dropped quite a bit. All right, here's the let's look what it looks like post market. It dropped even more, so you can see. I don't know if you noticed that the candle moved down. So here's market close, okay, and here's post market. So we can see that also in a 5-minute chart. So there's the big gap up, and then it just spent the rest of the day dropping. So that's one of the things you have to watch out for. You know, like when you see that a price pop, on earnings, and then it immediately starts selling, okay, that's usually a good idea. It's usually a good idea to take profits at that point. I do that pretty often if I see something like that. Okay, let's get back to the other stocks now. TSM, let's look at this one on the daily. Here it is on the daily chart. It's under the moving averages. I'd stay out of that one. That was Steve Weiss's final trade. Yeah, I mean, it's overall, if you look at the weekly chart, it's still in a strong established uptrend, okay? And it might bounce here and it might start showing some strength, but what I would wait for is for the breakout of the 311.37 level, that prior high there. You can see that resistance level there. And here's the daily chart. So we got a little bit of work to do on that one. UNH is, if you look at the weekly chart, it's still in a decline. All right, there's no question about it. It's still under the cloud, under that 200-day moving average. And the daily chart, yeah, it's had this little, resurgence here, but then it came close to the 200-day that was declining right there and then dropped. And now it's showing a little bit of strength these last 4 or 5 days, but I wouldn't be jumping in here either. Okay, now let's get into the rest of these. So these are some of the Mag 7s, like Apple, which was actually down 0.65%, but it did hold up above the 9 period there. So it still maintains its blue flag, okay? But the rest of these here, like Tesla, it is still under the moving averages and above the cloud, under that diagonal trend line. Meta, also, obviously in a decline here, and it doesn't look pretty. We had those reversal candles and it dropped. So we had a bullish hammer, and this is why I specifically say, yeah, it might look like this is the bottom when you see like a hammer like that. But if you are in a very strong embedded decline, like we see right there, and you're under the 200 and you're under these moving averages, you're really taking a chance. So Meta, it looks like it's going to continue its downfall. Okay. Microsoft, and let me show you what the chart looks like on the weekly. There's the weekly chart. Maybe it's going to come down all the way down to the cloud. Another maybe, I don't know, what is that? Another 2% or so before it finds some support. Microsoft showed some strength today. We got a bullish harami pattern right there between those two candles. It's called a bullish harami. It's when you have a red candle, large one, followed by a small candle that follows it. That's within the body of it, okay? And so this one has potential of moving up if it can get above the Tengen-sen on the weekly chart. On the daily chart, we're still under the cloud. So stay out of that one for now, I think. All right, and then we'll look at some of the sectors here, like XBI, which looks pretty good. This is the biotech ETF. That's moving up. I like that one, 0.09. Energy, it dropped a little, 1.4%. When it's remember that trend line that I talked about? It hit it there and then dropped. But it's still in an established uptrend, okay, on both the daily chart and the weekly. All right, as far as the Ichimoku is concerned. But it's testing it's testing itself right here. We're going to see if it can rebound off the top of this cloud here. Industrials. Let's see. We have another reversal candle. It's called the Gravestone Doji or Shooting Star. I mean, it kind of looks a little bit like a either or type candle. I think it's more of a Gravestone Doji. Because the wick is not super long, and so that might pull back. It was only up 0.10%. The Tengen-sen crossed under the Kijun-sen today, so this is why I'd hold off. But it still looks bullish overall. Okay, on the daily and the weekly chart, it's just like it's stalling. So XLK on the weekly chart still holding up above this 291. It's also creating a bullish harami on the weekly chart. Here's the daily chart, sticking above the Tengen-sen and Kijun-sen. I like it still, even though it was only up 0.31. XLV, of course, is obviously the clear, strong sector here because it's just taking off. Once it broke through that 146.76 level that I talked about, it's just taken off. It broke through the 150.32 as well. So this is all good news. Where's the next level of resistance? Why don't we find that together right here, live? Okay, actually not really live, but live enough. All right. Okay, so I think it's going to find some right about that level there, which is, let's find out the high there is 155.01. Yeah, 155.01 is where I would be looking to see how price reacts once it reaches that level. So we're getting close to that. There's 155.01. How far away are we from that target area? We're just 1.5% away. So that's where it might find some resistance as it's moving up, and it's getting far away from the moving averages. But it's still looking really bullish on the daily. And here's the weekly chart. Okay, there's the 155.01 level. It's a weekly level. Based on this, I'm sorry, it's based on that little candle right there. And then following that, we might as well throw on that one right there too. That one is 159.64. And that one, I believe, is going to be considered a monthly level. So we're going to color it purple. So purple is for monthly. If you ever see those on my charts, okay, that would be a monthly level. The blue is a weekly resistance level, which is, and then the daily is the light red there. And so that's how you can, you know about the significance in this, you know, the higher the time frame, the more significant that resistance level will be, basically. XLY, okay, there's a weekly level it needs to take out. On the weekly charts, looks good though overall. Still very bullish on the daily chart also. Let me move this a little bit to the side. There we go. Okay, what about SLV? Check this one out. Okay, now this one just got entered into the blue flag segment here. We have, as you can see, silver is looking a lot more bullish, by the way, than gold right now. Look at the ADX moving up, positive DI moving up, negative DI moving down. Look at the volume coming in, and it looks like it's going to test that 49.25. If it can break through that, it's going up. It's moving. So we've had the pullback at the 41.70 level. It bounced off that level, came down, could not quite reach it right there, but got back above the Tenkan-sen, continued moving up. Now we have a positive crossover. We have the Chikou span still. Never got underpriced, by the way, on the daily chart, if you notice that. And then we've got the cloud itself moving up here. It's looking pretty bullish. I like silver. So watch silver. Check out your silver stocks. And here's the weekly chart again. So that 49.25 is going to be an important level. It needs to clear that, but once it does, I think it's going to be very bullish for silver. And by the way, that's a very defensive play as well. So for those of you who are concerned about the economy, you know, potentially falling apart, you know, silver's not a bad place to have some exposure. And then you got SMH, which, by the way, also got a blue flag today. Yesterday it was under the Tenkan-sen. Today it popped right back above, but it wasn't a really bullish candle here, and it didn't happen with high volume. So yes, it technically got the blue flag, but I wouldn't be overly excited about this one quite yet. The negative DI is still above positive DI with SMH, and as you've seen, the technology stocks haven't been doing so great recently. Here's a weekly chart. On the weekly, it still looks pretty bullish. Obviously, we're still in a strong uptrend. All right, GDXJ, this is the weekly junior gold miners ETF, getting back above Tenkan-sen here this week. Here it is on the daily. We don't have everything perfect here quite yet. Tenkan-sen is still under Kijun-sen. I'm just going to run through these. Oil K, I'd stay out of that one. Okay, that's the ProShares K1 Free Crude Oil Strategy ETF, down 3.44. Copper, showing some strength. Remember, we talked about basic materials, and this would fall in that category, up 2.13%, but it's still not technically quite there yet. We still have to take out some highs here, and we still have a lower low here from the prior one. XLC is in the cloud, so no on that. Bitcoin dropping another 1.3%, but holding up above that 55.62. This is the IBIT ETF. It's that prior low. So if it breaks that 56.62, I'd be really concerned that it's going to drop further, and it could precipitate. Okay, XLRE. Real estate is hit the 200, dropped a little bit, down 0.79, under the cloud. Stay out of that one. Home builders also is obviously in a downward channel. Okay, it's very clear to see. Let's stay out of that. Utilities, you know, this one's showing a little bit of strength here, but it's still, we have that negative crossover, and I'd hold off on that one too for now as a sector, or this particular ETF, not necessarily the sector itself, but the ETF. XLP is still in a decline, in the downward channel. Financials popping above the cloud and then coming right back in. So that's kind of concerning. That wick represents selling at the end of the day. So if we switch it to a 5-minute, we can see that here's financials. It had that big run in the morning, and then it spent the rest of the day, right? It spent the rest of the day just kind of dropping, as you can see, creating that little consolidation stage. Maybe that's setting up for another break above that level, but it's not too exciting. And I wouldn't get too overly excited here with it yet. If we can get, I think we need to also change the level here. The 54.25 needs to be adjusted to this prior high of 54.49. Yeah, 54.49. So let's fix that. That's where you might find resistance if price can close above the cloud. The cloud is also bearish here in the future. None of these stocks have a blue flag, which means that there's something technically wrong with them. Even GLD, which was up 1.61% and breaking above the Kijun-sen today, the Tenkan-sen is still under. All right, so silver looks more bullish. Let me get rid of this here. Okay. There we go. So it's starting to look more bullish. You can see the directional movement index is starting to look really bullish here for gold. The ADX for the first time here moved up. Positive DI is moving up. Negative DI is moving down. This is the daily chart. Let's look at the weekly too real quick. Yeah, so you can see it bounced off that Tenkan-sen on the weekly. All right, and now it's taken off again. So again, all of these can look like they're breaking down and it's the end of the world, but it's not necessarily the end of the world. It's just we have to look at our levels and see where they are at with the weekly chart. We're going to sometimes have 1, 2, 3 weeks in a row where price is dropping, and then we get a nicer little pop-up. And that's the beauty of the charts, that they can tell us, they can give us some more evidence and more information about, so that we can make better judgment calls on whether we should hold a position or close a position. I'd stay out of materials. The XLB, as you can see, even though it was up 0.71%, the XLB I don't like. But there are specific industries within XLB that I like within materials that I like. And I'll be going over those in this weekend's members only video, where I go in more in depth about not just the strongest sectors, and I'm not talking about XLB or XLE. I'm talking about looking at the entire sector, hundreds of stocks, and then also looking at the industries within the sectors, so we can get a better picture about, okay, which ones are strongest. It might not necessarily be every single industry in materials that's good, right? Like today, for example, I'll throw something out that I found out today, just doing my analysis. Steel looks real good. And I bought a couple of steel stocks today. You may want to check that out. Again, if you want to find out about that, become a legend level member. All right. And guys, we did have a couple of requests from members, but they were requests for stocks that are in the portfolio. And I don't cover those in the daily free videos here. So, if you're going to request a stock, members, please request stocks that are not in the Blue Cloud portfolio. And that's going to do it for this video. Thank you for watching, guys. And I will catch you all in the next video.
Thank you.